we're expecting from the market today. Stan Shamu joins us from IG in Melbourne. Stan, great to see you there this morning. The open for our market, SPI futures just up a little there, follows a flat lead from Wall Street and on pretty low volume. So what does it mean for our market today?
Yeah, no, absolutely. It does seem like we're in for a fairly mixed start to the session. We've got an opening call of around 5119, so that's relatively flat from where we closed yesterday. Just a little bit higher maybe, but there's nothing much in it. It just really seems like equities are entering sort of a consolidation pattern after what's been a monster rally over the past few weeks. Of course, at the moment, there are no real major drivers to keep this risk rally going, so it will always get to a stage where we plateau sort of, and as well investors just lose confidence in accumulating stocks at elevated levels. Just looking at some of our local stocks, we're actually expecting a bit of a positive start for BHP, up about 0.2%. Now that's mainly because we saw a fairly resilient performance by the commodities space overnight. They actually did, the resources actually helped the FTSE close a bit higher yesterday and outperform some of the major European markets there. Of course, with the likes of Newcrest and Medusa, they might get some support after gold managed to tick about $11 higher overnight as well. So I think it's still mainly about the US dollar and how it's being repriced. That will probably continue to be the main driver of how equities trade over the next few weeks, particularly as we get more and more US data. Now just switching over to the banks there, we are expecting to see CBA still in focus. Of course, it traded well above $70 yesterday. It's now within striking distance of BHP from a market capitalization perspective. So that might be one of the main things to look out for today. I think its market cap's around 113.6 billion now, and BHP, this is just those ASX listed BHPs, around 114 billion. So soon enough, we might see them equal, or possibly CBA might be bigger than BHP by the end of the trading session. But of course, we'll need to see how these leads translate to some of the local stocks. Just looking at Westpac, they've got a downgrade today to equal weight by Morgan Stanley. Now this probably won't mean much, considering they raised their target price for the stock to $31 as well. So that should be interesting to just keep monitoring what the analysts feel about the banks, considering exactly where they're trading at the moment. I think we had a bit of a discussion the other day, and I was saying the higher the price, the lower the yields as well. So that will be something to consider as the banks start to look a bit more expensive there for the analysts. On the local front, or economic front, we've got home loans data expected to show a 0.2% rise, and we also have Westpac consumer sentiment to look out for.
Yeah, absolutely. Let's quickly talk the Australian dollar, because we see it back at that 103 mark now against the greenback overnight. But has it formed a fairly solid base at 102 now?
Yeah, well, it's always a difficult one to call in terms of the Aussie dollar, because it normally tracks commodities and confidence in China. So it really has been a sharp reversal from the lows we saw on Monday near that 102 level. So it really does look like this might be a good indication of where the commodities and sort of risk sentiment is for the Asian session. I think a lot of bulls would be hoping to see that 103 turn into support after having been resistance for a while. Of course, we don't have much on the economic data front to look out for, but if we do continue to see some of these commodities track higher, and that's probably more of a factor of the US dollar being repriced, then we can expect to see further strength in the Aussie dollar. Of course, with various central banks around the world pledging to open the taps and support markets and economies around the world, particularly from Japan, the US, and China as well. It certainly seems like the RBA might not have to act quite as swiftly to support the local economy. So maybe some analysts or traders out there just feel that we might not see as many rate cuts as most analysts had priced in this year. I think at the beginning of the year we had as much as 75 basis points worth of cuts priced in by a lot of analysts. So as this comes out of the market, or gets repriced by the market, then we'll probably see it have an effect on the Aussie dollar as well. So I think that will be the key to how we see the Aussie dollar trading over the next few days. And of course, we can't ignore what happens in Japan today. We continue to hear different headlines about the BOJ and what sort of easing they might take and when they might take it. So this will be a big driver of sentiment in Asia, and of course for the commodities space as well. Yesterday we had that Nikkei article doing the rounds, just suggesting that maybe Haruhiko Kuroda might look to bring in easing well before that April 3rd to the 4th meeting, but this was put down to some sort of misinterpretation overnight, and it's probably why we've seen the dollar yen pull back a little bit, but we'll have to wait and see if we get further developments. I mean, we seem to be getting headlines from Japan almost every day these days, so absolutely the yen will be one of the key currencies to watch out for in Asia today.
Yeah, do you know what the misunderstanding was exactly?
Yeah, no, basically what came out of the Nikkei newspaper was that he might be looking to conduct a new form of easing before the official BOJ meeting, which is next month. But some feel that his comments were misinterpreted, and he just meant that he's looking to deliver easing as soon as possible, but not necessarily before the meeting. So I think that's what caused the pullback in the dollar yen.
Okay, Stan Shamu, thank you very much for chatting with us this morning. Stan joining us live from Melbourne there. Well, a multinational bribe